The last concept that I wanted to cover in my fundamentals of price action is liquidity. Everybody should know what liquidity is, and the understanding that liquidity exists completely disproves the theory or strategy of support and resistance. Support and resistance is quite flawed. And while people can trade it because the market only moves in two directions and eventually you'll get a position, or even with high probability, you'll get a position that allows you to take a trade from some high that you thought was a support zone. How the market actually operates is with sell stops and buy stops, right? When you place your sell or your buy, you have a stop loss somewhere. And that stop loss, or people that trade with momentum, they have orders that actually enter them into trades when it runs through a high. They trade with momentum, right? They want to see it enter their trade and run just a little bit higher to get their profit target, right? And how the market actually operates is with these sell stops and buy stops, the market targets where a lot of orders are resting, right? These orders are resting, your stop loss is resting above highs. And the market targets these highs to take out, first of all, your stop loss. Second of all, the buy stop orders, which enter people into buys to go higher. And it runs up and barely taps them in and then runs everybody into their stop loss, right? It took out your sell orders and it took out their buy orders. All of them. It took them out. That's what the market aims to do. And then what it does is then it runs on the sell side. And once it runs on the sell side, it hit its target, right? And then it comes back to take out the sell stops, to take out your buy. If you were buying down here, you have a stop loss somewhere down here. It takes out your stop loss. And it kind of runs like this on a buy side to sell side basis. How you nail specific liquidity is following red folder news. So pulling up Forex Factory, right? We have CPI today. That's what we had today, this morning. And like other weeks, we have FOMC. We have unemployment claims. All of these news are significant factors. The days before those news are days that build up liquidity, right? We get a lot of consolidation on those days, creating this sort of range. Like if you grab a box, you can sort of create a range of where the market was ranging. And in this range, you can see the days following strong news, it typically ranges like this, right? We have this range right here of liquidity accumulation. And then when market hits with news, it runs on the buy side and then the sell side. Right? This is the manipulation phase. And this is how you should be trading, or at least understanding how the market works, with it running on previous highs and previous lows. And to nail it down to specific liquidity, what you do is you wait for this accumulation and find where equal highs or equal lows rest. So this, for example, right? We have a lot of accumulated equal lows right here. So when market ran into this fair value gap, you could have been aiming for the lows, because market tends to create jagged edges, right? When there's flat liquidity like this, it runs down there and takes out all those orders. So you can think of it like this. If it's consolidating or accumulating, eventually there's either going to be a news event or some sort of manipulation that's going to run to take out the buy stops and then the sell stops. That's liquidity. I hope this helps you understand how the market works a little bit better. Incorporate this into your model if you haven't already, and stop trading support and resistance.